And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Sunday, September the 10th, 2023. Well, the first thing you're going to notice is that Thinkorswim has shifted to or rolled to the December contract. So I have made the adjustments, moving the labeling, number one, and then making the adjustments with my Fibonacci levels, number two. So let's kind of dive right in. If you listen to my podcast that I did yesterday, you already have somewhat of a picture of what I'm looking at and how things basically have not changed. But what I continue to leave right now and not giving it a whole big boost to actually being in place would be what I'm considering to be my alternate account based on the hourly chart, which is nothing more than suggesting that the minor wave 2 may still be in process, and that would come via this being an X wave, so an ABC X, which would suggest we're getting an additional ABC to the upside. So it would be a double ABC to form minor wave 2. Now, with this spike and then the decline that we're now seeing, it's going to fall more into place and probably hold with that. We still are working through a small 4. We're going to come down, hopefully in that 5th wave, and that will put in either minute wave 1. Actually, yes, it would be minute wave 1. It would be completing down here. So let's take a look. 1, 2, 3, 4, and we're coming down in that 5th. We use the same fibs. I've now adjusted them, put them in place. And so the measurements, when we're comparing wave 5 to wave 1, suggest 44.87 would be equality. But we're looking now for this low to come below 44.84. So it doesn't have to jump immediately to this level, although that would be the natural selection would be the first as being equality. The second is 1.618. The third is 0.618. 618, it actually provided some support on Friday. But again, it wasn't in place. It just was a level that provided support. So this I would not include because we're already there and been there. And so it's going to be equality, or if the management, if we're getting into like a 1 and a 2, and we're going to come down to a 3rd and a 4 and a 5, and we just get slightly below like 44.75-ish or so, then the structure would lend us to suggest that we did put in the wave 5. But once we can get through 44.87 and we slide a little bit further below, then the natural progression should take us to 1.618, which is 44.62. So those are our support levels. I'm still now looking for that 5th wave. And then again, a minute wave 2 rally. So it should be a little bit larger, but undoubtedly likely to come back way up into here or higher. So depending on where it stops, then I'll be able to put the retracements up, and then we'll get an idea of where this market should go. Moving average wise, we're still we're playing between the 50s. If I were to open this up a little bit so we can see, you can see we got the 20 and the 50 SMA on the bottom and the 50 EMA on the top, and we're just kind of playing out right between the two of them right now. So I would look for a break and then a drop, and then we have price support at 4,500, 44.99, again at these different levels, and then we break to here, fib support 44.87, looking for that move below 44.85. So everything is still kind of lining up for that to occur, moving averages as well. So over in the NASDAQ, got the same story. We had to go through and make our adjustments to all of the fib levels and just pulling all of the the Elliott labeling into place because, of course, there's now $200 premium added to where we ended up on Friday to where we're opening today. So that's the big difference. As we move out into December, we got a lot of interest, in not interest in terms of people are looking for it, but interest in terms of money. So when you're carrying a position, you're going to be paying interest. And so that's all factored in. And if you're selling it, you're selling that premium and the fact that through, the interest. In any case, what we're looking at is basically the same thing. Got a minor 1, minor 2. We're hovering down, looking for a completion in terms of a minuette, wave 5, to put in that first wave of minute degree. Now here, that low for wave 3 is 15,341. So if equality would fit, and that is 15,336, that would fit if it comes down and the structure is clean in a 5. And right now it's looking like it could be 1, 2, and then we get dropping in a 3rd and 4 and a 5. A break below that with some significance would drop it down to 15,186. And that would be 1.618, where wave 5 would be 1.618 times the length of wave 1. Moving averages here also. The 200 SMA continues to just kind of roll higher, looking like it's going to start to roll over. We already have the EMA has rolled, but going flat, pretty much with the market now playing with trying to pull itself back up and go higher. So while all that plays out, we do have resistance pretty much right where we're touching right now. 15,000, let me go right there. 15,016 is where the 200 the 50 EMA comes in. The 200 EMA comes in at 15,539. So those should provide enough resistance, keeping the fourth wave in place here at 15,579, and then providing that additional drop down. Once complete, same stories we saw in the NASDAQ, and that would be that we would be expecting a minute wave 2. It'll be an ABC, and once we get that, we'll be able to put the fib retracements in for wave 2. So as we move into the week, let's take a look at what we have coming out in terms of economic data. And so we're going to be looking at September the 11th and September the 12th. There is nothing. It's clean. There's nothing. Of course, tomorrow is the anniversary of September the 11th, 2001. And we'll see. We'll see. Nothing scheduled for that day. On Wednesday, we have the CPI. And on Thursday, we have initial jobless claims and the PPI. So we've got some major inflation data, which should have an effect on the market, should continue to feed the narrative of what the Fed may be expected to do at the end of the month. We are now in September, and that meeting is at the end of the month. I believe it's at the end of the month. Let's just take a quick peek. It's the 20th. So Wednesday the 20th. So a week from this Wednesday is when we'll get that. So this would be a clear indication of, gee, are they gonna go ahead and give us that 25 basis point hike now, or are they going to give us a pause? So that's going to be the big thing that'll be being played out the balance of this week, or the entire week, going into next week. So again, Thursday we have initial jobless claims, producer price index, U.S. retail sales. And then on Friday, we have import prices, Empire State Manufacturing, industrial production, and consumer sentiment. So, the balance of the week, first start of the week, nothing. And the balance of the week should be pretty full in terms of information for the market. That's where I'm going to keep it. Yesterday was a very lengthy one. I'll keep this one on the short side as best I can. Our next update will be on Monday, September the 11th.